So today's trading takeout, ironically, is why you should not really listen to the banks. I mean, I get all the bank research every single day, but there's kind of a specific use case for it, and it's not to follow what they say. I think certain analysts are better than others, and there's definitely fantastic information you can glean from it. But you've also got to think of the provenance of where research comes from. So banks aren't buy side, they're what's known as sell side. The buy side is your hedge funds, your asset managers, that kind of thing. Whereas the sell side, they're basically brokers, if you like. So brokers don't necessarily put on the same risk or have the same intentions as a trader at a hedge fund, for example. Traders at hedge funds need to have an edge. So you have to ask yourself, okay, why would banks be putting out this research? If they're looking to actively make money from the market, well, they're not. They're supplying information to their clients for their clients to decide what to do with that information. So there's certain analysts, as I said, that you should pay more attention to than others. I think Bank of America do a fantastic job with a research report called the Flow Show, which shows where different assets are being bought, which ones are being bought more than others, and the reasons perhaps for those assets being bought. And also they have a great piece called the Fund Manager Survey. But there's certain pieces that tend to get a lot of attention, such as Goldman's like 5 best trades for the coming year, which I think in 2019, they actually lost all those 5 trades within the first 2 or 3 weeks. So there's reasons as to why you should and shouldn't pay attention to them. And the more experienced you become and the more you read these things, these reports coming from the banks, the more you can deduce kind of what's important and what makes sense to you. But a lot of the time, because they are analysts and they're not actually putting on risk as well, they might actually indicate tops or bottoms of the market, short-term ones anyway. So it's good to pay attention to them. And especially the reports that end up getting onto the likes of CNBC or just more mainstream news. They're the ones really to pay attention to as contrarian indicators. There's one guy called Marko Kalanovic who is at JPM. And, God bless him, he's a fantastic analyst, but he's been so wrong on equities over the last couple of years, like so wrong, that it kind of became a bit of a meme in FinTwit circles and in finance in general. But he knows his stuff. It's just I don't know if he's a trader. There's a big difference between a trader and an analyst. So yeah, I think always try and understand the provenance of where the sell side's coming from. And if you do ever pick up on, a trend of something being good or something being bad, because bad information is just as useful in trading as good information, then make use of it. Note it down. Try and build a picture of, where these inflection points are with these reports coming out.